All right, so we are recording this live. I'm just going to go through on how you start your levels, and the steps are pretty simple, right? Go to a higher time frame and then add in your support and resistance levels. So I have the month time frame out. So this is your 1 month on IWM, and this works on every ticker. So just like legit, just go and be like, all right, I see levels of what they would call like support or resistance, like key levels where we've come into and rejected and failed, or we've completely pulled through and then come back to retest, which we've done here. So I know prices, about this 167 level, so I'm just trying to find a couple levels above and a couple levels below. If it's one or two below, great, but we'll refine these as we go. And you could find indicators to help you. Like we know that there's clearly this was a higher low on a month time frame, served as support. I know that more recently, you can use this as a level. You can use this as a level, and we've gotten pretty close with our support and resistance level. So I got 4 lines on here now on the monthly time frame. So and that's on or around the actual price. So I got 2 above, 2 below, which is kind of ideal. And this is for really whatever ticker you want to use. Just go down to your 1 week, and then you can start refining, right? So we know that I plugged this one in, but it's more or less here. So I got resistance, then I got support. Down here I got support, then it breaks through, and I get resistance, breaks through, support. So this is a key level. So all I'm just trying to do is on the monthly identify them, on or around, and then these end up being my weekly resistance levels. This is what I want to see. This is what I want to use is my weekly levels. Actually, kind of like this one. And it's okay to go back in time and be like, all right, where we saw a lot of support here too. So we might add a level here, as we've come to this level quite frequently in the past. So that becomes our weekly / monthly support and resistance levels. I've used smaller time frames, so we'll go down to the 1 day, and then we'll continue to refine them through your 1 day. So this is I like this one. I think these two marry up pretty nicely together. That one's good. All right. So once you've identified monthly, weekly, and daily refined resistance levels, now these will start coming into play. You can add a couple here, so we know that price pulled back up. We know that this is a key level that we've used in the past. Be a little bit more minute with that. You can also add in like this level too, right? So we actually broke below, and because it served as support in the past, we came all the way down here, created a low, and we closed above. Okay, baby. Good job. And I might add one more. Add one more right here. You don't need to flood your You don't need to flood your chart with a ton of lines. The one thing I forgot to tell you guys is when you go through and you create these like monthly levels, you can adjust them. So like if I made this a 4, like I want this to stick out a little bit more because this is all more my monthly time frame. And as I start going down the weekly, I'm gonna take this as my weekly, and I'm gonna just change it. So like weekly support resistance. I'm gonna keep this as a monthly. I think this is a weekly support resistance. I'll just keep changing these up so that when I go back through, I know that the red is my weekly support and resistance levels, and I go down to the day, I could change that up to a different a different color. So I'll use this. I'll just change this up a little bit. And use that as a day. Use that, we know that's the month, and I think we have that as a day. All right, so and what I'll do is I'll change this one up too. All right, so now I got my monthly in red, my weekly in orange, and it's labeled, and then my yellow in the daily time frame. What's up, Veronica? All right, can you go get him one? All right. And then once we get this, we've identified that, and then I go out into the 4-hour time frame, and it's just scaling down. All right. Which way is trend telling me? Trend on the 4-hour, trend on the daily, it's down, right? So it's very easy to play downtrend. Now, when we're close to the lower lows, like we talk about down here, like we've basically created a level of structure, lower low, and we use that. It's okay to play calls because we're so close to this level, but the idea here is where can we anticipate the next lower high, right? And those are going to be at these levels of resistance. And at the end of the day, we're trying to find order blocks, right? So 4 hours is a good time period to start using for order blocks. Also add this to your notes. If you have what they call visual, volume profile, you can see that as our volume profile is pulled over, we know that the majority of volume is going to happen as well with these support and resistance levels. So we shouldn't have a ton of support and resistance in this level because there's not a lot of volume profile here. All right, and that's kind of where we're looking is, how do I find the order block up in this range so I can capture this movement through this low volume area. All right, so to draw a order block, we'll start with the 4 hour, and then we'll do 1 hour. So if you want to look at swing trading, if you want to look at intraday trading with a little bit more more strong levels of bounce, you're going to use those 4 hour and 1 hour time frames. So anytime you basically get a break of structure, right? So your structures, you got your high, then you have basically your low. So your high and low have been set. So now we're just waiting. Now we get a lower high, and as soon as we break below the previous low, we've established a break of structure. So your break of structure occurs when you've got you get a low, and you get a break of that structure. So this would be your break of structure to your side. Like for me, I label it sell. All right. Now the initiation of that order block occurs on the opposite candle before the expansion. So however you want to look at it, your technical order block, you could take it up to here. Just be more specific. All right, thank you. There you go. So that would be your order block, because what we end up getting is we're looking for an imbalance of price. So here is like a larger time frame balance, and then we break out, right? And that ends up being your expansion. And when you get that expansion, you can just draw your order blocks from that first, in this case would be the bullish candle. And we'll go to another example. We get basically a balance zone here, and then we've essentially, here is your change of character, is when we break the high here off an expansion. So your first candle against that is this bear candle, and that becomes our order block. And these order blocks, you're going to identify these order blocks and be relatively close to your support and resistance levels. So we're just going to draw that guy out. All right. And we just do this at whatever time frame makes sense to you. So if you're swing trading, if you're going to swing trade, you know, a week, a month, or whatever, and you're going to use like Trenzy, you know, add these order blocks so you can see where price is going to respect and come back to. So we didn't quite hit this one up here. This is a decent expansion, but we knew at some point we're going to pull back up into this level. You could draw many off the same movement down. You could draw as many order blocks that make sense. So you have an order block here, which we end up coming back into, right? And it shows a little bit of a level of stall out on this like pullback. And then we obviously come back down to this one. All right, I'm gonna get rid of some of these like higher high, low stuff. For me, you just use like volume profile to validate some of these support and resistance levels. I know that I got a lot of volume here on a 4 hour, a lot of volume down in here, which is already labeled. All right. But now, for me, I like clean charts. I have no indicators pulled up. And then the way I like to trade is on the daily time frame. So once I've got, you know, basically, if I go the 1 hour, I know I got a decent order block here. All right, and we end up coming into it a little bit right here in the pre-market, and then nice rejection lower. So we get an expansion lower. We get now we break the low. It's an expansion out of this balance zone, which creates a supply, and that supply you mark off the first opposite candle before you expand out of that zone. You guys have any questions on how to create order blocks using like an expansion? And I want this to be as interactive as we can make it. All right, cool. So that's order blocks. You can work your way all the way down 15-minute. After that, outside the 15-minute, like, okay, well, we can start shifting our focus on other stuff. But you could see how, you know, if you're on Thursday, we got this hour order block we ran right into, and we've been dropping ever since. And then as we're like in the middle of the trading day, you can find these order blocks that get created on smaller time frame, which is the thing that I like to play. And these are more or less where my calls come from, as I'm watching these order blocks get filled. So you can scalp the beginning and then let market structure develop. All right. And let's say for example, we get, you know, we're creating higher and lowers on different time frames because the stock market's fractal. But I see one candle here before we start breaking lower, right? So we know that if I miss this drop and I'm out because I took profits, that's fine. Let it keep coming down and then create different order blocks. And then once we've come back and we kind of break structure here, where we actually create a higher low and then a higher high, look for a price to come back into the order block, and then you can look to take a short position here. So instead of chasing it here, because there could be a reversal, we don't know if this is going to range or trend today, but now we have a better opportunity to get into a higher quality setup. So we're not chasing things, but I know that if I were to get into a blind trade here, I'm looking for a break of structure on a larger time frame. So I know that if price comes above here, more likely going to be a break of structure. and I'm identifying where my order block was created from this expansion out of this zone. So I could target this level. So as soon as, and these are like the shorter scalp trades that I enjoy doing, right? So we're in this trade. What we're looking for, if you're playing the 1 minute, which is my favorite type, is because I'm in and out of trades, is I get, you get this obvious structure. There's a little bit of a balance zone that's created here where price isn't just like always falling, and there's actually like some concurrence between buyers and sellers at this level. And then, all right, cool, I like this level, and then we expand lower pretty hard out of it, and then continue running lower. So when you're looking at this this level, this order block, how do we know if it's a valid order block? So all this is telling me is where I'd like to go short, but not necessarily tells me when. The thing I'm looking for is very similar to the thing you're going to be looking for when you do scalping off the open, is you want to look for consensus of selling. So we have good buyers coming in, we push right into this thing, and then immediately we have two massive candles that go completely against the trend, right? So that for me is enough of a consensus to go short, and take this trade. Like this trade, realistically, if you're looking to enter it, probably getting in, somewhere around here. As you see this first candle develop, it is a big rejection out of it. We go back into it. All this is the market tripping stop losses, or the market filling dark pool orders. Hold on 1 second, guys. All right. Okay, cool. And then off of, assume you guys can hear me still, I'm just chattering away. But if you guys want to create a new one, like we come up to this level, and then we expand immediately out of it, and we break structure to the downside. So like, okay, what's saying that price ain't going to come back here? So let's say you messed up, right? And this is a kind of a tip, like a pro trader tip. Let's say, hey, I see this order block get set up. I'm going to take calls off this thing, right? And you're going to go long. So you're like, all right, I'm going to take a call and come back into this order block. If we break structure, then I'm stopped out. But I'm going to target, and let's say in the morning you're like, oh, I think I could take it back up here. Like this is a good, maybe you thought this was your order block, right? And you didn't see this guy, which happens, right? If you're not looking at different time frames, right? So now all of a sudden you're expecting to take a trade and run this thing back up here, right? And all of a sudden, this trade's kind of going against you now, and you're like, oh crap, I'm in the red now because of either theta or because of the strike I'm in. Like, don't worry about it. Just try to identify another order block, and like instead of getting stopped out here, right, and then closing your trade for a loss, what you could do is hold on to your trade just a little bit longer and identify another order block that's in your favor. Like, okay, well, we get expansion out of this, so maybe this is like stop loss criteria down here. Like, oh man, I just got stopped out of my trade. Cool. Take profit when we come back up into this order block. So it's not profit per se. This is where I would close my trade. So you get stopped out here, but I close my trade here at this order block, because before we break lower, we should retest this level, right? Because it's a new order block, it's open, and I'd say 9 times out of 10, yeah, it's going to happen. This was something that I started doing. So your stop losses are more dynamic and not just like, oh, I got into a contract at 0.6. My stop loss is 0.4 because that's 20%, and my take profit is 1. Okay, cool. That's a very one way, uh, very simple way to look at profit. Or the next level is like, okay, cool. So if we break structure, then I'm going to go out of the trade, and then we come to this order block. This order block, I'm going to take profit. That's good too. But like the next level is trusting the system enough and trusting that you know what you're doing in the market enough to be like, all right, I have a dynamic stop loss where I'm going long. I think price is going to bounce and create higher highs and higher lows. And you're like, oh crap, I broke structure here. Right. So this is a break of structure for me because I actually created a new low. And instead of closing your trade for a loss, I'm like, well, there is an order block. So there's like a 90% chance that this comes back into it. And this thing runs right back into your order block. And then instead of you closing at a loss, you're taking a 5% gain. That has been for me, probably one of the biggest game changers between having a red days or green days is not taking losses because I was wrong on a trade. Like we're gonna be wrong on trades. Like we're gonna get stopped out. But instead of losing our minds, and just like simply cutting the trade, learn how to do a dynamic stop loss. Like you can almost never be wrong if you do it right. And then as the trade's going against you, let's say like, hey, I'm gonna go long here, right? And I'm gonna take this up here to this level, my stop losses, whatever. As you're in profit and you're taking these positions, and you're like, all right, I want to buy literally every time the price comes down in here into this level, I'm gonna buy. So as it's coming down, your premiums are dropping as well on calls, but you're reducing your average. So when you're dollar cost averaging like this, so now you're at, let's say you got here off the break. I'm like, all right, now I'm at 0.6. It goes to 0.7, but I wanted to see this come up to another order block, never did. As it's coming down, premiums are dropping to 0.4, 0.3, 0.2, and then I'm buying small scaled contracts, right? I'm only buying 2 or 3 at a time, but by the time I come back down in here, my average is at like 0.2 and I have 10 contracts. Well, I don't need to look for a 0.8 or a 1.0 to get profit. I just need it to go back to 0.4 and I've doubled my profit and I have more contracts. So that is more of for me, like a varsity level move as far as like dynamic stop losses. So if you guys got questions on that, we can find another trade. So, all right. So we have this as an order block. We actually come up through, and we come through it, and we get rejected hard. So we know that this order block is basically canceled out, and then we move lower. All right. The next level, this will probably be easier if we do this, so we're not cheating. All right. So as you've got, yeah, but hey Ash, welcome in.
Hey, good morning.
All right, so we're on the 1 minute time frame. This is how I intraday trade and scalp throughout the day. And when I find setups like this is what I call out to you guys. Like this is like, all right, cool. I know this is a setup, and I know that when price comes back into this level, if we create a break of structure, technically I could tell you guys take losses, or you can use dynamic setups. But this is, I think this is one of the call outs I made last week because I saw this order block. This is a pretty good order block because we got a lot of selling out of it originally, and I knew that if we were to come back into it, there's a good chance that we could too. So I'm just looking for, identifiers that tell me that this is a selling order block, which I get when we come right out of this and we expand lower, we break structure, and then it bounces, which is good because there's an order block here, right? Because we end up breaking structure here. So it just happens throughout the day. And as long as you start in the beginning of the day and you just know, like, okay, I got an order block here, I got all these order blocks set up. I know that price is going to bounce and travel between these two levels. And then that's where I made this call, like, hey, look at 170 puts. It's 10:30. The market looks to be trending, and you can just ride this thing down. So how do you know to get out, right? Like, where's our order block? All right. So if we just move forward, what we're looking for is we basically created a structure here, right? So let's say if we come up here, we can use any expansion out of this to identify an order block. So we'll just keep going. Cool. So we know that we got and this is no reason to close your trade, right? If you're still in this trade and all of a sudden you get an expansion out of this, no big deal. Even if it comes up here, like I'm buying all up in here, right? But what I know is because I've basically had what we call a change of character or a break of structure, whatever you want to call it. You get an expansion from this bearish candle. I know price is more than likely going to come back down, right? So we might get a low, a high, and then it comes back down, as IWM likes to do. So all right. All right, so we know it comes back down. This doesn't tell me, again, these levels, these order blocks aren't telling me to sell or like close out of my trade. What I want to look at is, do we reject? The two things are going to happen. We knew we were going to come back down here. We identified that from here. Are we going to bounce? Are we going to slice through this thing? Or are we going to come back up, find another order block, and then move lower? So there's a couple different options. Your two options are, should I close it on a bounce, or do I hold it for more profit? So based on what we see here is that price is just cutting right through this thing. For me, I would hold on to this trade, especially if you got a couple days on it, right? It's okay. So we'll keep holding on to it. Cut right through. And the fact that we cut right through is no longer a validated order block. So we should continue to move lower or chop between a balance zone before we actually move lower. So because we have another break of structure, so we get a low and a high, then we get a lower low and a higher low and a higher high. So we've created structure on the way up. All right. So this is another good thing to key on. And throughout the day, just draw the order blocks. We have an order block that was set up here, right? So price should come back in here. We get another. We're just looking where it doesn't. It creates like a different, and that's why I said, like, if you were to get something like this indicator, this will tell you like your highs and lows. But once you get better at visually just understanding, like on the 1, the 2, and the 5 minute, where these order blocks are created, you're gonna be you're just gonna be a better trader. So I know that I got a low here, right? But I get an expansion out of that and break it. So any order blocks that are above it are a valid order block. So I know that as we're coming up, we're coming down. So the order block for me is the bullish candle. So I'm watching this order block for rejection. All right. Let me slow this guy down. All right. And then the fact is that we broke through it. Now it's a invalidated order block, but what do we also do? So throughout the day, this is happening. We break structure, but the expansion candle out of that happened here. So as order blocks close, we end up coming back into this and dropping. I'm waiting for price to come back down here. All the while, I'm just potentially adding more more contracts, right? I'm just adding more contracts as we keep getting rejections in this level. It's okay as well, right? So we come back down, we to almost to the cent, touch this one, and then we bounce back up. Now we're going to come back to this order block. Again, this is going to happen throughout the day. All right. So we've basically closed out of the order block. We did come into this order block, right? That was created here. We came right back through it and then cut lower. So we knew that this could potentially be invalidated here. This guy gets invalidated as we cut through it. So anytime order blocks are there and you see price either cut through it or sometimes bounce through it and then go the opposite way, we've invalidated the order block. So now all we're looking for is where price gets, we're just looking for another expansion out of balance levels. So we're still in this trade, right? So for me, this is still a valid trade to hold. Let's play it. Because all we're doing is kind of chopping back and forth. And this is the one I think I said, hey, just swing this because it looks choppy. We're trending, we're moving lower. Like anytime you're playing the trend, it's very hard to go wrong, right? So playing calls, maybe not a great idea. Wait for him to come back into an order block and continue playing puts. All right. Do you guys need to see more examples on this?
Not pretty good, but if you want to,
You let me know. Like we're here this morning, just like so you guys can learn how to identify these levels, and we could do that too. So for fun, right? For fun, just open up a chart, and you don't have to worry about like the whole like monthly thing. Just like try to identify like your order blocks, right? We know that we got all we're looking for is where is structure, and if you're struggling, then throw this higher high, lower low live on an indicator, and then this will tell you like all right, cool. So now I got on a 1 minute time frame, I got a low here, I got a high, and then I got a higher low. All right, so what I'll do is we'll just play this out and see if there's any structure changes, right? And the structure change is going to happen if I get basically a new high or a new low within that structure. All right. Boom. Sorry, I tried to pause it. All right, turn this guy off. Just gets too muddy for me. All right, so what did we get? When price expanded, so this was a low for me at one point. This was a higher low, and then price came back through and broke through it. Okay, well the expansion out of that, there's going to be a little order block here. I know price is going to bounce into. All right, so we know that's a thing. And if you're looking on a larger time frame, let's see if we can break. We got a new low, right? So we get a nice low. We get expansion lower here. I know that I got an order block right here, right? Because what we end up doing is breaking the previous low, right? We get a break of previous low, and now I get an order block off that break. And the thing I like to look for are these big bankers candles right here, these two. If you find those big bankers candles, those usually lead to your order blocks or the initiation of them. So you can find them. They're everywhere. There's probably an indicator that shows you where it's at. And there's one here. I don't know why I can't draw shit. There's one here. There's one, here and here. These are your big baker's candle. It takes a lot of money, right, to move stock like this. So the theoretical idea behind the order blocks is that obviously there's a fight between buyers and the sellers, right? And you know, when you're talking about institutional people and like when they want to make these trades, you know, I want to trade when price comes back into an area that I initiated it, right? So we know it comes back in here and there's a nice big expansion out of this zone. So I know that like there's institutional selling that gets initiated here. Well, price comes right back to it here. Price comes right back to it here. Why not? Why not that buy puts every time it comes back into this order block, right? Every time it comes back into this order block, why would I not be buying puts? So I'm just averaging in, and I'm looking for a bigger move, especially on a market that looks like it's going to be trendy today. And I can almost guarantee you that we get another push back up into this area, right? Because we got an order block off an expansion. Hey. Huh? It's old coffee. All right, so let's see if we can push back up in this order block here before we get an expansion out of it. So this might be like an intraday trade for you, right? Now I know we're getting a little bit later in the day, but we've identified a pretty good order block. We've expanded and we broke through a low. We've created a new low off an expansion that started off this order block. So when you guys are looking for maybe not so much scalps, but you want to look for an intraday trade, this is kind of the setup you want to look for. Is okay, I break structure, I'm making a new low. Where the order block occur off this expansion here, off this order block, right? So now I'm looking to take a short position right here, and then anything higher than here would constitute an invalidation of this trade, right? Because we've cut through this order block. But your take profit is going to be coming back down here to the order block, right? Which when we have another break of structure on the high side, we end up getting, this is your order block, right? We've basically created a low. We've come up. We've got a change of character. Now we got structure forming. We got break of structure. And what I'm looking to do is take it short from up here. So this would be something like, hey, I would call it in a group, and the way I would call it is, hey, entry is going to be 171.66. Stop loss is over here at 171.87, and your take profit is 170.96. So that's your trade, right? And it's up to you on what puts you want to get into. For me, I want to set it up like like I want to buy. Like for me, I'm gonna look at buying let's say the 170 puts for 50 cents, and I'm gonna get 5 contracts here. All right, I want it. My goal is 20 contracts. My dynamic stop loss is going to be at 171.87. My take profit to scale is going to start at 170.96. So this is the way I trade, and this is the way I'm trying to teach you guys how to trade this. And I'll teach you what this dynamic stop loss is and your take profit to scale is, because I don't want to just completely close out all my trades, because then I'm just taking profit away and out of my pocket. Mama needs fish dinners because she likes to eat healthy. Fish costs some money, so now I gotta trade to where I can make more money. Well, how do I do that? Well, I'm gonna get 5 contracts here, and I'm gonna play this up and see if this comes into my order. I'm just being patient. Boom. Look at that. I'm in the trade. You know, let's say I got in the trade here. Because I wasn't patient. And for me, this is a little bit of a, you know, I'm looking at this order block as well. For me, I'm like, all right, I'm in the trade. I'm going to take the trade here, right? I already got my plan. Oops. I already got my plan. And I'm going to circle every time I get in the trade. So I bought a contract here. Let's play this out. All right. I'm going to buy another one here. Dynamic stop loss. It's going to be very similar. I'm going to take profits down here still. All right. What I do know is I got an order block down here that hasn't been touched. So now I got 10 contracts. I'm already going on a downtrend. And if we come back up, if we come back into this order block, I'm going to take another put trade, right? Which I would have done. Where's my pen? I would have done here, right? Why not? Why not add to your put position? We know it's going down today. So now I got my 15 contracts, right? Oops. 15 contracts, and I'm targeted down here. But I got 15 contracts, say at 0.5, but because I've been buying at 0.3 and point maybe 2.8, my average is now closer to here. I'm just going to create a new text box. So now my average, hypothetically speaking, is average for the 170 puts is at now like 0.42, right? But now I have, what did I say, 15? 15 times contracts. Right? And I'm still targeting this order block, right? So keep playing it. And let's see if we create a new low if we rip right through this order block. So my scaling, so now as I'm coming down into this order block, I paused. I thought we paused it. So we bounce out of it. I might have taken profit on these 5 contracts. Now I'm down to 10, right? And now I'm just holding 10, and I'm looking for a bounce back maybe into another order block. Maybe we come back to this order block, right? We've expanded out of this level, and I'm gonna take another one so I can get my 20 contracts, all right? Dynamic stop loss is up here, and I'm just targeting another low. But because I have 10 contracts and I'm buying another 5, it's not going to hurt my average much. And if we just keep moving lower, then I'm not even going to worry about this guy. And I'm going to watch. I'm just going to watch and see if we come back to this order block. But now we get kind of a break of structure back to the high side, right? So we get, this was your previous lower high. We get a break of that change of character off an expansion that's initiated off this order block. Cool. So I know that this one is more or less an invalidated, well, it's a closed order block, but now I got a new target down here. All right. And it's kind of how you can hold on to your trade just a little longer. It's going to be a little bit more of emotional, and you guys can start with less contracts. We know that there's an order block created here, right? Because we got a low. Now we got a new low, right? So we broke structure. We broke structure off an expansion from this candle. So we know we're going to come back into this. And we go right through it. we come right back into another order block, right? And then we've taken our last short position here, all right, where we buy another 5 contracts. So we've taken this trade. Now we've we've sold 5. Now we're back to 15 contracts. So now I'm here. I got 15 contracts at an average of 0.52 now, right? Now I've hit my original goal. I want to see, do we come back up in here? Which we do, right? Why not add 5 more contracts? I got a dynamic stop up here. Now I'm back to 20 contracts. Now I'm back to 20 contracts. Now my reduced is like down to 0.47, right? All right, let's say the trade goes completely against you. Now I'd still be in this split, right? And all I'm doing is I'm buying more contracts. Like for me personally, I'm buying more here, and because I'm trading the trend, right? Even though we're breaking structure on the way up, we know that this impulsive move up is more or less manipulation to trip out sellers. So they could put more liquidity back in to take it up to short it, right? So I know that I got a validated order block that hasn't been tested off this level, right? So I know I have this as an order block. I'm fairly confident price is going to continue coming down here. So I'm not getting scared because even though we've basically broken different levels of structure to the high side, even though this is on a minute chart, I know that maybe on the 2, the 5, and the 10 minute, we've broken enough structure to move higher. But I'm still in this trade, and I'm at like 25 contracts. And I'm waiting for price to come lower, back down to the order block down at the 170s, 170, 80 level. And all price is doing is going back and forth between different levels of order blocks, right? So we got a basically expansion out of this level. We have an order block here. We knew price is going to potentially come up to this level, and there's a nice rejection out of it. So like maybe that becomes another set of 5 contracts for me to buy. Now I'm at 30 contracts, right? So now I have 30 contracts at 0.42, right? I'll just say, I'm just hypothetically speaking, 30 contracts at 0.42, and I keep buying the top here. What do you think institutional traders are doing? They're selling at this level. And it's okay to average as we're going up, because right now on a higher time frame, like a 15-minute time frame, we haven't really broken much structure, and there's no reason to not take another short position out of this level, right? So we haven't really broken enough structure for me in higher time frames to cut the trade. But now I'm at, let's say, now I'm at 40 contracts at 0.4, right? Do the math. You're $1,600. If you have a $10,000 account, that's a very reasonable setup to make some decent profit here. So now, I got I've exceeded my original expectations, and I'm looking for a nice move lower. All right, we're obviously moving into after hours, but now I'm sitting on 40 contracts. These might expire if I'm trying to swing or intraday trade. Towards the end of the day, I might go a couple expirations out We're just gonna fast forward this guy. I'll fast forward this through the next day. Bear with me. Where the heck did price go? Drop. Yeah, all right, look at that. Nice gap down through the order block. So I know when we open up, I could probably cut some of my contracts for decent profit. All right, 9:30 is happening. All right, 9:30. I still got 40 contracts, and now I might be looking for times to sell, right? So it was good. I don't know why this is like not stopping. Okay, whatever. We'll just keep playing it. But at the end of the day, like we have 40 contracts that expire in like 7 days, and we're holding on to a trade that's, probably 200% right now, or 100%. And this is, I think, the trade I took the other day. It's like we're getting a nice run up towards the end of the day. That's fine. We haven't really broken much structure to the high side. I think all we did was come close to this order block, not even, and we're just moving lower. So again, don't be shooken by these, if that's a word. Don't get shook out of this trade because we started pumping up. Just buy more puts because we haven't really broken structure to any high side, and we're playing the puts anyway because we're playing the trend, right? So this is just a unique way to average in. I originally averaged 5 contracts for 50 cents. I sold 5. I started averaging in, and I've averaged up to 40 contracts. So you gotta kind of anticipate trades going against you a little bit before they take time to develop. But something like this is, let's say you're on this trade here. We're all the way down here, and we've essentially taken this trade. What's the profit? $6 we've taken off this on a delta that's probably somewhere around 0.6. So you can do the math on your profitability. All right. So, and you could do this pretty much any time frame, any ticker are going to give you this. Let's say you didn't like this setup, and you're like, all right, well, back here towards the end of the day, I didn't want to swing these overnight. You're looking at, you're looking at this region here. All right, let's see if I can back this up. All right, you're in the trade. You got 20 contracts, and you're like, all right, I don't have the funds to double down. And you're like, all right, well, it's come to my order block. It's gone through it, and it's tripped my stop loss. Okay, cool. Now, what your dynamic stop loss is going to look like is, even though you've tripped your stop loss here, right? So this is your stop loss. I've tripped my stop loss. Okay, instead of cutting for a loss there with 20 contracts, look for your last order block. I know that my last order block is in profit, and I know that if I could just wait and have a little patience, price should come back down. We already know it's going to come back down, but price should come back down to an order block as I'm, I've averaged in up here, and I can get out of this trade here for profit. So now I've taken my dynamic stop loss here. So instead of a losing trade when it breaches my stop loss as it breaks structure on the way up, I can take a profitable stop loss, right? So that's just the difference between losing money and just being a little patient. Like it's definitely gone against us. Those trades are going to go against you, but because you've set yourself up with better averages, you're able to get out of the trade profitable because you're not stopped out up here. So this is just the difference between dynamic. For me, I don't know if that's like a real thing in life. I'm not I'm sure there's smarter traders that do this, but I'm hoping that you guys can adopt something like this, practice with paper money, and learn how to not get stopped out here, and then understand price action, how it comes to order blocks. Because I guarantee this is going to move up, right? We know that this moves up before it comes back down. All right. You guys got any questions on that? All right. Let me.
No questions.
All right, no questions. All right. All right, let's open this up. Let's talk about scalping, right? That's the thing that we haven't talked about yet. Let me get rid of some of this stuff so it like freezes up my computer. So this will be like the last kind of lesson that I show you guys before we open up like Q&A. And if you guys got any more questions, if not, then we'll just kind of close it. We've been doing this for about an hour. Okay, so for scalping, for me, it's off the 1 minute. All right, so what we'll do is we'll bring this down so we don't know what price is going to do. And then we'll just like find a random time that I don't remember in the past. All right. All right, let's go replay mode and let's go here. All right. Where are we at? There we are. All right, so we're going to take this one tick at a time. And we're going to zoom in. You can draw out like levels of support and resistance that are created throughout like your after hours and stuff, but we're just going to go right to 9:30. All right, so I think it's here's 9:30. One more. All right, cool. So it's 9:31. It's in the market. What I'm looking for in this first candle, as this first candle starts to develop, I'm looking puts or calls, right? I'm not biased by any way the market's structured. I am a little bit more favorable to puts as we're on a downtrend from the pre-market. But we've seen it a million times where we see a downtrend, we see an immediate reversal back up, and then we go continue the trend. So what I'm looking for is I want to see if you want to play aggressive, then your next candle needs to break below here, and your stop loss is going to be 1 penny above the high. And then you're just looking for weakness in the other direction before you close your trade. So for me, you know, depending on your account, maybe start with like one trade. So for me, off this one candle, this is a big bearish candle. So I'm looking puts. So, and for me personally, I'm watching the next candle develop, right? And I'm in the trade. I might get in the trade right at the open, or as it's showing some weakness coming back. So now I'm in the trade here, and I'm just waiting, right? Or sorry, what I'm looking for is a nice run below here. Stop loss is going to be here, and as this thing starts to develop, you're in this trade. You're in the puts off this candle because I'm looking for the technical way to make the entry is 1 penny below the low, and your stop is 1 penny above the high there. So you're not in the trade on any of these plays because you haven't technically gone lower than the low. So as soon as you get 1 penny below the low, you're in the trade. All right, so you're not in it. You're just watching this develop. It does run up a little bit, and then it starts to come back down. This candle here goes below the close or below the low off that first bearish candle. Now I'm just holding on to this trade, and I'm waiting for this thing to show me compelling reason to get out of it. This candle here at 9:36 would be enough of a reason you could take profits as it starts to come out of it, and you're looking for essentially a 38-cent movement lower. You could do that and close out maybe half or a third of your trades, and then just see what the next candle looks like. So the next candle, yeah. See, that would be enough reason for me to get out of that trade, is to understand like, hey, where's momentum, right? So that's good. What do we got here? So that's your trade on this one. Not like a clean setup, but let's see if the next one gives us a better setup. All right, let's fast forward to the next day. I wonder if I could do this. All right, I think I'll just have to play through it. Order block down here. See if price comes back to 181.24. Mm-hmm. And then it takes off. Or you get an order block here, which come right back to, and do we reject? Nope, cut right through it. Choppy. All right, let's fast forward to the next day. All right, come on, dude. I don't know why this is. All right, let's see if this. We already kind of know where this is going, but I'll show you the picture. All right. Let me refresh this guy. It's showing me a pain in the ass. All right. Very cool. My internet like went out. All right, I'll show you maybe 2 or 3 more examples, but I'm not gonna do it in replay mode. I'll just kind of show you what I'm looking and walk through it. But every day it's like this. Come on, IWM. Come on, IWM. All right. Come on, IWM. All right. So we're on to 1 minute. Let's look at. So I won't go replay mode, but I'll show you on a day like 23 September. All right. So for playing something like this, the first step is identifying a directional candle, right? And the directional candle is going to happen with like this guy. So your first directional candle of the day is really this one that develops at 9:32. Not a great setup, and it gets a little chop in the beginning, so you got to be a little patient with it. And I think this one, when I played puts, I held through this one because I wanted to see what the next one painted, and because it came all the way back down. So I'm looking at the low here, which, you know, following the book, you're technically entered here. You know, however you want to trade this, but like the rule is one penny below your directional candle, which is going to be like this big one, or if there was like a nice long wick, you're in this trade. This could have been very, very easily stop criteria here. So again, there's some like creativity that comes in this. We end up cutting back down, and I'm looking for a weakness. Like this is the first weak indicator, and then as this starts coming back up, then I'm probably looking to close off the scalp. So I'm not looking to hold on to this trade. I want to say I got out at 946 off this trade, because I wasn't liking the way it was setting up, because I didn't know it was going to keep dropping. You could very well look for order blocks to help you identify potential bounces, but for a trade like this, like don't be upset, because you would have definitely been tripped out, because technically it went above your penny rule, right? So just understand, like, if you just trust the direction, like I know it's going down today because this is Friday, and we're gonna get a little chop in the beginning. Let's see if we could find a cleaner setup the day before. All right. All right, here we go. All right, something like this. Now, when you start to trade a ticker that you're very passionate about, you just like, right? First directional candle is up, right? It was showing a lot of weakness, right? So as you start to like watch how the markets develop, there's a lot of weakness up here. So I'm like, all right, well, the uptrend is very weak. Maybe I could take the trade up to this order block, but there's something about this guy that's like, I'm not liking this thing. I'm not liking the way it's set up. And as the next candle is coming back down, like, all right, well, maybe puts is the better play. And I'm using this candle as the directional trade. So now I'm going to take a trade short, because I didn't trust this first candle and then the second candle. Even though it went up and you could have taken it and then just got stopped out, I kind of like this candle. So I'm going to use this as the first indicator candle for me, and I'm reading this thing as it's coming down. Like, all right, even the bulls had this for a second and couldn't do much with it, right? So I'm still in this trade, still in the trade, and as I start getting these like little doji candles, and then I get a nice little buyer's candle back, I might actually exit the trade here at 946. So you're in the trade for about 12 minutes, and pretty healthy profit on a scalp. So for me, there's a little bit of art to it, and it's hard to teach, and you just gotta know what you're looking for. So keep going back in time. So another example. All right, here's a good one. All right, this is a good candle. This one is a nice long, got a lot of volume on this candle, and it's all selling. So I take my entry. So this one doesn't do much for me. There's no entry there, but I would get my entry off this candle at 178.99, right? So I take that candle and I'm writing it down. I get a little bit of like uncertainty here off this doji, and I'm like, all right, what's the next candle give me? If the next candle like was a nice push back up, I would have got out, but it wasn't. I would have got out somewhere off like this gap. So as soon as it gapped and then like went above here, I would have got out. So your entry on this scalp would have looked something like this, and I would have got out probably off this candle here. So that's a 74-cent move off this one. Let's go one more example. Here's a good one. All right, so there's a lot of chop here. This one may be a little harder to play, but if you're gonna wait and let it develop, or if not, and like it's up to you guys. But like as you get nothing here, then you get a nice directional candle. Like you could be in and out of this trade in a minute. So I get 1 penny break below. This thing runs low, and as it starts to fight back, I'm out of the trade. So like this whole thing is like, hey, how can I get 5%? How can I take a small win right off the bat? So you get in 10 contracts for puts. As this thing starts to move low, you're in puts, and then as it comes low, you start seeing it fight back, and then you could get out, you're going to get out with a little bit of profit. And then you're just looking for another setup, which you end up getting here on this one, right? So on this, you get another directional candle, comes back. It technically breaks below, so you'd be in on the trade on this at 939. Next candle comes low, little indecisiveness, and then you can get out on this trade here. So there is a lot of art to this. There's no like strict rules. The rules are pretty simple. Is one, find your directional candle, right? What's going to happen usually when volume's at its highest. So directional candle, and then you're going to play as soon as it starts showing that it's going to go break the low, you're in. And then once there's, enough compelling reason for the opposite way to start buying it back, on this case, and then you're out. That's it. Let's do one more. And for you guys who are trying to get in on like scalping in the mornings, like I don't lose because it's all a it's kind of like once you've kind of not say mastered it, but once you've got the feel of this thing, you don't lose. So for this one, boom, you get a nice bullish candle. You could tell by the way that this ticker moves in your time and sales how much activity is in the market. There's a couple of days last week, it was just super slow. If you're not sure or not confident, don't take the trade, So something like this, we're looking at, something like this as a setup. We're looking for 1 to 3 pumps up. This is actually a pretty good setup. So we're in the trade. Technically, you get into the trade here off this gap up. You're in the trade. It's going to go back and forth. It's a lot of activity, and all of a sudden you want to pump up. It gets pushed back, and then there's like indecisiveness, and I'm out of the trade. Like obviously you can continue riding it if you can predict the future, but you can't. But you're not looking for anything crazy. This is an 86-cent move in a 2-minute bar, and you're only in the trade for 2 minutes on an 86-cent move. So the rules are pretty simple. Find your directional candle. 1 penny break above or below, you're in the trade for calls or puts, and then you're going to carry that for 1 or 2 more pushes in that direction. And then once you've got your 1 or 2 pushes, the next thing is look for indecisiveness. If it looks like it could potentially reverse on you, get out of the trade. You're up quite a bit. So this one is not as fundamentally like by the rules, and it's a little bit more feel. And I've been trading IWM for a long time, so it's easy for me to get into a trade like this, take it out, and I'm in it for 1-2 minutes, and then I take the trade because I'm happy with this profit in the first 2 minutes of the day. Like you will be more right than you are wrong on this, and it's okay. Let's say this went up and then drastically decreased. That's fine. You're just not taking the trade, or you get stopped out. Which happens, right? This is not. No, this is a beautiful example here. I want to say on 16 September, I was calling these out live. We get a nice push up, and I'm like, ooh, I don't like this, because even though it was like a full candle all the way up to once, it was just a nice push up. There was something about it I didn't like, and I was just watching it, and I was like, all right, watch for puts off here, just because it's like more of a feel. And as you see this thing start selling off, I'm like, all right, let's play puts. So we got into puts up here off this. This right here is a directional candle. This is a bearish directional candle for me because it's all selling off. So I'm in the trade. We're going puts. 1 penny below here, and we're just looking for price to show weakness, right? So we come down. There's a nice the bulls have it for a second, but don't hold it, and then we get nice like indecisiveness on this candle. So we could basically cut the trade. So we enter the trade here because it's a nice. This right here is bearish to me. I'm in the trade. I'm taking it. This isn't enough compelling reason. The bulls are going to get a chance to do something with it, but they didn't do anything, and then we continue to sell off. Here, there's a little bit of indecisiveness, push down, and then immediately push up. This is enough for me to cut the trade. All right. Oh, thank you. All right. I think that's good on examples. If you guys have questions, unmute and go ahead. And otherwise, we'll just call the morning. We've been on this thing for about an hour and 15 minutes.
Hey, say CJ. So on Webull, they don't have pattern day trading, which is more based off of liquidity what you have in your account, and then whenever it finish off, it kind of just it has to pretty much transfer over, right? It takes about a day for everything to transfer over to the next day.
Yeah. So the rule with pattern day trading is a FINRA rule in the United States. So when you have less than $25,000 on a margin account, right? Because there's only two accounts we can have: a margin or a cash account. If you have a margin account of less than 25,000, you will be flagged as a pattern day trader if you open and close in the same day. For Webull and even Robinhood, I think most of the platforms that we trade off of, if you can actually have a cash account in Robinhood now. They allow that. I like Webull because I have a lot more options mobile wise. So I'm at work, I could trade very easily, and that's why I like Webull over Thinkorswim, is because of the mobile features that Webull has. But when you have a cash account, you could trade, open and close trades as many times as you want, as long as you're pulling money out of a settled account. But once you've closed the trade, let's say you open up a trade and you're at you pulled $500 out of your settled account into an option, right? And then you close your option, all that money goes into an unsettled fund account, right? So if you have a $2,000 account, you've spent $500 doing like this opening trade, that $500 plus whatever profit goes into unsettled funds, and now you have $1,500 left over in your settled funds. But once you've gone through like 4 more trades, and now you have $2,000 plus profits are in unsettled funds, you can still pull from unsettled funds. But if you close a trade with an unsettled funds, you're gonna get flagged as a good faith violation, right? Yeah. So options trading, you have to give it 1 day, basically overnight, for those funds to settle and go back over your settled account. And then if you're just trading equities, right? Like, hey, I'm buying IWM. If you close IWM, it takes 2 days for those funds to settle.
Gotcha.
Yeah, that's the big difference. So like if you got anyone who's got like a smaller account, it's better to have the cash account, because then you can get in and out of trades. All right. And that's just like, I know Nash, we were talking about this before, is like, hey, you want to lean more towards swing trading, which is great. Just open up a time frame and be a little bit more patient and get in yourself like more quality trades, because just like I'm showing you on a 1 minute time frame, this happens on a 60-minute time frame, right? You just have to be patient and watch where order blocks are off something like this, because stocks are fractal. You're going to see these order blocks develop, and you can play, breakout stock. You can play breakout. You could play. We know that there's order blocks on smaller time frames, like the 15 and 30-minute, that'll show you like this is a good level to sell, right? This is a good level because what do we have here? We have a lot of resistance. We got nice support. We break through. We bounce off resistance. Like, why? This right here. I'm looking at this. And just happened to come here. I'm watching this level, because anytime you get something like this wick, that's showing me a lot of sellers are at this level, right? When you get a lot of sellers here, they're probably not filling all their orders here. So we can expect price to come back to this level and then we can go back to shorting another short position. Then you set up a dynamic stop loss. You know, like, all right, I'm gonna stop out of this trade because I don't feel like playing it through a gap, and I'm gonna take this down to another target area, which will be another support and resistance levels, which we already know there's order blocks down here. So if you go back in time, you can find your order blocks. Right, so we get a nice expansion. Expansion starts off this order block. I know that price is going to come back down here. I mean, to a T. So I know that we get. It's probably harder to see, but you get like a nice rejection. Nice rejection. If we come back into this level, if we come back into essentially this level, I'm looking to go short, right? And we do at the end of the day on the 18th. And now you're taking this all the way down to a previous order block. So that's one way you swing. So if you're swinging, but the contracts you got here in August might not expire for a month out. So they're going to be a little bit more expensive. But, if you got the 195 puts for, September, whatever, you got time on this thing. And you're only holding, like, luckily for us, it comes perfectly into an order block and goes right perfectly to an order block 4 days later. So you're swinging this thing and you're waiting. The only time you exit in the trade is if it hits your order block, or if it changes structure and you stop out. But you can do this on a cash account. You could do this on a margin account. I would recommend everyone with less than 25K switch over to a cash account and then just play off the cash account, right? Swing trading is great. I would say if you're patient and you understand order blocks, like, you're very, very rarely ever going to be wrong. Like, very rarely, because technically your break of structure doesn't happen until here, right? So you can essentially be buying puts all up in this level. Like, that this isn't your stop loss. This is where you load puts, is in this level. And if you do it, strategically off order blocks, then you can absolutely increase your average here. So when they does make that drop, you're actually making more profit, and you're in a better position to even stop out. So, that never happens. But this here, let's say you're not playing the gap. So over the gap, you're out. This is a 1-to-9 setup over the course of 2 days. So you end up taking, $9 in puts profit on IWM, where your delta's pretty strong. So maybe not the exact answer to your question, but whether you're playing cash or margin accounts, if you prefer swinging, this is the setup you want to see. You want to see a setup like this, where, and if we're looking more or less where we're at now, like, we're not playing puts here. You're not in a position to play puts here, right? We have to wait. We see rejection here. We see rejection getting set up here, right? It's not enough for me to get into this trade. Ideally, let me get rid of this guy. Ideally, price comes back to this order block, right? This is what I'm looking at. I want to see price come to this order block before I look to go short. So what I'll do is you'll basically set an alert on whatever tick you're looking at, and then you just wait for that order to go off, and then make some notes on this, like, hey, watching this order block for potential rejection to play puts to swing out, and then just go 2, 3, 4 weeks out on this, because there is a good chance that we find a move back down to this order block, expecting, it hasn't developed yet. So this order block right here does not get solidified until we break structure. So once price has broken the structure here, then this order block down here is a valid order block. And then, price is going to do its thing. And then when it comes up to this level, I don't buy it here. I'm waiting for confirmation. Confirmation is going to come through. What's my volume look like, right? Does volume increase as we come here? How do we validate this order block to buy? We validated it based on price structure. The next question is, how do we validate to buy? And the few things that we're looking for, you can look for trend lines. You can look for volume spikes when it comes to that level, and those volume spikes need to be against the uptrend. In this case, you need to see price kind of reject out of this pretty strong, and then you're like, all right, this is a good enough trade for me to enter. If we break above this previous high, that's enough for me to get out, but I'm targeting back down to this order block. So this is a 1 to 6. You could probably hold on to it for a few days, and I wouldn't be surprised that we see price over the next couple weeks, this next week, do something like this. We've had a pretty serious sell-off, right? The trend's still going down, but we all know that price is going to make its way back up to this order block, because where does this order block tie in with, right? With a much drastic order block right above it, right? So we know that there is a potential for price to come back up into these order blocks. And if you have a margin account and you can't day trade, and you want to stick to a margin account because that's your preference, fine. Just now you have to be more patient for price to come back into your order blocks. So now you got to wait, set an alert, and then go find another ticker that you prefer, that's maybe a little closer to another order block, and then you just set alerts. That's all it is. But your cash accounts will give you more freedom to enter and exit trades. The only downside with a cash account is like that money that it just moves over to an unsettled, and then you got to wait a day. All right. Well, I mean, good traders, they only need to trade like 3-4 times a day. That's I think it's a lot. Even if you get like 1 to 2 like very strong trades, like that's a solid. That's solid for day traders. Like 1 to 2 like very good trading setups. And for swing traders, you might be once or twice every couple weeks, because you're waiting for price to come up, but you're taking a pretty significant price. I mean, this is a $9 move. Even if you got one contract and your premium is like 60 cents on a $9 move, you're not spending a lot of money, and your profit's going to be like 200-300%. What other questions do you got?
Can you show us how exactly you get Webull set up for a trade ahead of time?
Oh, yeah.
I still haven't placed a trade on Webull yet.
Yeah. All right. So, all right. Here's Webull IWM. If you're, let's say it's the beginning of the day, it's 9:20, right? You're like, all right, I'm gonna scalp the open. Price is currently 167.31, and I don't know if you could do this on a mobile. I've done it, but I'm not familiar with it enough to do it. But I'm like, all right, for the puts, I like the 166, and you're just gonna right click and add to a watch list. For the calls, I like the 170. I'm gonna right click, add to the watch list. All right. And then as those are added to your watch list, let's see if it's here. Where's my watch list? There. A watch list. Now I can go, all right, it looks like it's gonna go, puts or whatever it is. I just click on it, and I can do a. I think it gives it to me. Yeah, so I'm looking at the puts, 170 puts, because its price is going down, and the nice thing about Webull is you can see if I hold control, I get options up here, and I can all I have to do is hit control and then press A to buy, or buy the bid. I think if I hold shift is my hotkey to sell. So now I'm in here, so because I think it's going down, and on my other screen I'm watching the price action, and I can just do control ask, buy the ask, or if I'm trying to sell, for me it's shift and I'm selling.
Did you set up those hotkeys or those default?
I set them up.
Okay.
How I did that, let me see. Oh, I know how. So, in your widgets, you're gonna add. I want to say it's either order entry or active trade. I'll tell you here in a second. Yeah, active trade. So if you go to active trade, all right. So you'll go to add widgets, and then active trade, or go to all widgets and then add this active trade. This active trade, you can actually go into the settings and adjust it however you want. So if you want to place order on stocks, if you want to place order on like options, like I want to buy the ask, you just add that. And then I want to say hotkey is down here. So you can identify like Control A is my hotkey to buy the ask. Selling bid is my shift bid, shift B to do that. But then you can, however, like if you have 10 contracts on buy the ask, you can change this to 5, you can change it to 1, and you can hit control. Like let's say this is on 5. All right. If I want 10 contracts, all I got to do is hit Control A twice. All right. So yeah, active trade settings will help you with your hotkey. But this done, and what you want to do is basically tie this. As you can see, it's kind of a lot like Thinkorswim, where you can tie different layers. I would tie this to a chart that I'm watching. Like this chart here is not the right one. Let me pull up the other one. All right, let me have to turn this into a Webull tutorial, but let's see if I can pull up. What's this one? Where you at? All right. All right. So here, let's say I'm looking at that. Let's pull up. What I also have is another watch list. I don't know where you're at. That's not it. It's not it. Not it. It's desktop. Sales. I don't know where I did with my actual watch list. Anyway, so if you want to add, you can add a widget and add watch list. All right. And then you can just like narrow this guy down. All right. And then just here. Hold on. Let's put it right here. All right. You can adjust however you want this to look, but then your actual chart. If I can find my chart again. Yeah, that's not it. It's desktop. I think this is the one I was looking for. All right. Yeah, fuck it. All right, here's what we'll do. We'll just add a chart, right? So you can go back here, add a widget, all widgets, and then over. Yeah, I don't know what the hell is happening. I think my mouse is dying on me. I'm just gonna add a chart. Of course, it's there. I think I can. Add a widget, go to all widgets. Let's see if I can add my chart. Completely jack this thing up.
Any chance you can do a video on that?
Nah, there's like
On that
a million
setup?
Weeble. There's like a million Weeble videos on how to do it. All I'm trying to do is pull up a chart. But you can I have my chart set up here, but you can tie your charts together, right? See how you get over here in the top right hand corner, you can set it as a group. So let's say this is on 5, this is on 5. So if I want to buy, I got to click the charts. Like I want to buy this 171 call, or I want to buy the puts. And then I'm here, and all I got to do is Control A off that. So on this open screen, I'm having, I have all the other, charts pulled up. But if you want to tie these as groups, especially these two, your watch list and your active order or active trade, and you just gotta go into active trade, change up the settings, and now if I'm like, oh crap, I want to buy, I want to buy LabU, I just go into click on LabU, and then I can just go control and buy that active trade. That's all it is. No, but you can see that since I'm like strictly an active options trader, I don't have any of these set up. I don't have my orders for stocks as any hotkeys. It's really just the options. That's all it is.
Okay.
But the thing I like about it is like you can absolutely just tie it's just like Thinkorswim. You're just tying the groups together. So if you want to buy like an option or something, it's as simple as clicking, like you want calls, clicking on calls, control, I'm buying, active trade, hotkey, I'm buying the ask, whatever it is, 5 contracts. Well, in this case, it's 10 for me. 10 contracts is the 171 call. It makes it real simple to be trading on your desktop. There's a button where you can cancel all open trades that haven't been filled. So if you keep missing it because it's moving, and you're just trying to get in and out real quick, you can go back and forth between hotkeys. It just makes things a lot easier.
So on your mobile app, is that much different for buying and selling?
Oh yeah. The mobile app is quite a bit different. The thing I like about the mobile app is that you can actually pull up the options chart. You can see what IWM's doing, and it's pretty quick too. The other thing I like about, and maybe it needs to be a mobile tutorial on it, but like let's say I have an open trade, you can go to sell to close, and you can actually put in your, let's say you're going into a meeting or whatever, you can actually set up a take profit and stop loss on options via on through Webull, where you don't have that feature on Robinhood, right? Robinhood, if you want to do a stop, you can do a stop. If you want to do a limit, you can do a limit, but you can't do both. On Webull, if you're on options, you can actually set up both. Like, hey, I got the 170 puts, right? Here it is. I got the 170 puts. Let's say I have this open. I want to close at 282 and I want to take profit at 572. And you can actually go in there, sell to close this particular one, and set your stop limit and your take profit and just walk away. And whatever one hits first wins, right? So it's just a very unique system. I really like Webull. I like what they've been doing. They've been like, it almost seems like every other week they set up some some other feature that helps traders. So they've been doing a lot of good things, and the options of equities that you could buy are a lot greater. You know, where you could buy a lot of different tickers through Webull that Robinhood won't let you buy. There's just more options, and you can go cash count right off the bat. Like I said, the only difference, I meant to say this earlier, is the between like cash account and margin account are the tier 3 and 4 options. And that's like your credit spreads, more your advanced options strategies. You can't do on a cash account. But yeah, that's basically it, man. Hold on, I got a Yokaba send me a message. Computer's running like exorbitantly slow. Screenshots. All right, great question, Kaba. Hey, so Yokaba asked me look, open up. What I would do is go to TradingView or whatever, and open up a chart. I don't care what chart it is. You know, if you prefer to trade SPY, open up the chart and like screenshot it. You know, like mark it up, screenshot it, and send it to me, and then I will absolutely walk through. Like, hey, I think if you were to add an order block here, or even if you were to make a video and send it to me, I can critique your work, right? So whatever you guys want to do to enhance and practice, I would absolutely do that. I mean, there's no harm in going into like to TradingView and adding in whatever, you know, wherever your order blocks you think you are, where you think they are. Do what you got to do, and send me your stuff, and I'll give you. You know, I can't say that I'm a professional trader, but if you want me to critique your work, I'll absolutely do that, 100%.
Sounds good, man. I appreciate it.
Yeah, great question. Yeah. Yeah, I got two buddies I work with, and they're getting into trading, and I told them like, you know, why don't you print off, like hard copy print a piece of paper with a bunch of, you know, price action, then you draw it up, you bring it to me, and we'll just like sit down like we're doing homework, and I'll just like critique it for you.
Yeah, that's what I was thinking, man. Like, kind of like, just bring up a chart that I like playing, like Cola, like KO. I like playing KO, man, and I kind of like want to draw everything out, and then definitely critique the work that I'm doing to validate if I'm cashing it or not. You know what I'm saying?
Yeah. Yeah, and like I said, you guys don't have to trade IWM, because order blocks, for me, I learned order blocks when I was trading forex. So I don't trade it actively right now because, you know, I get tired and I like to sleep. And I would trade forex more or less in the in the in the evenings when I got home from work, because I couldn't trade during the day. But I'm gonna say, let me see if I got it pulled up here. Forex. So I got a whole watch list on forex, and I love trading forex. It's my favorite thing, because order blocks work phenomenally when it comes to forex trading, and that's where I learned. So it doesn't matter what ticker, it doesn't matter what market you're trading, order blocks work beautifully, regardless. So again, nothing in the market is 100%, but I guarantee you, I don't say it like guarantee, but like I will promise you that if you actively increase your ability to recognize order blocks on different time frames, you'll be a far more profitable trader, right? I haven't had one red day in the last I don't know when. So, I can only just right now for the short duration of while I'm under contract with the government, I can only give you guys so many trades. Like Monday is hard. Tuesday, Wednesday, Thursday, okay, I can help you out there. Fridays hard because Mondays and Fridays we have a ton of meetings in preparation for the week or preparation for the following week. I just don't have the ability to give you higher like quality trade setups. But what I can do is in my off time teach you how to do this because what I'm doing is nothing impossible. It's all technical stuff that you can absolutely learn. Some I learn. Um, so and my buddies at work have learned it and they're understanding it and they have tickers that they like. They like trading SPY or Q or Tesla. It doesn't matter. It's all the same. It's just recognizing market structure and then understanding where these order blocks are placed, right? There's a reason. There's actually like a technical. It's like no one's going to trade a trend line, right? Like if you get every time it comes to this level, it's going to bounce. Like, it doesn't bounce because there's an invisible line there. It bounces because there's something there. What makes it drop like that? Well, it's because of supply and demand. Well, supply and demand is the same thing as order blocks, right? There's levels of supply and there's levels of demand that are created, and those just happen to fall on trend lines. You could draw a trend line in anything and make it make sense, but because this freaking yellow arrow line here is there, doesn't mean that it's going to drop, right? I can identify that through order blocks based off imbalance in the market, right? Imbalance and balanced zones will create supply and demand levels that we can go back and trade. And they paint the picture in the past and they predict where price will inevitably come back to, because if you're an institutional trader, you're not filling all your shares on one go. If I have $1 billion and I'm trying to like sell them, I have to wait. I have to wait for price to come back to this level, right? Back to these levels. So if I'm sell a bunch here, and I'm selling little bits, and I offload a ton here, but I still have open sell orders up here. I'm not going to change them because the market went down. I'm going to wait. Market come back up here, and I'll sell them again. So as an institutional trader, like understand, why price moves the way it does is because of order blocks, right? And order blocks are comprised of a litany of things. It could be all of our stop losses or order blocks. It could be dark pool levels or order blocks. So there's just a bunch of different things, and it all ties back into what actually moves markets. It's supply and demand. It's not trend lines. It's not patterns. It's not psychology is fine, but like for me, it's black and white. It's there's no emotional in it. So I will help you teach. I will teach this to you. I'll help you get better at this in whatever means that is. Whether you send, if you guys want homework, find a ticker you like, take every indicator off, so it's like a naked chart, and then something like this. All right, draw order blocks, and then take a screenshot and send it to me.
Oh yeah.
Cool. All right. If you guys don't have Mike, and I'll stay on for a minute. Send me a chat. I'm gonna go eat a late brunch, and if you want to talk one-on-one, that's fine. I don't know if we have another one of these planned for this evening, but what I will do is post this video because I've been recording for the last hour and 50 minutes, and I guess everyone who missed the live can go back and watch the video. So. And